different levers through which circular economy initiatives can be adopted, specific attention should be devoted to the different financial tools that can be exploited to this aim. Among the financial actors that are interested in ESG and sustainability-related topics, there is an increase in debt and capital instruments related to the circular economy. This may refer to the exploitation of existing tools or the creation of dedicated ones. In particular, four main tool categories may be identified: private equity, venture capital, or private debt funds, all of them being either completely or partially devoted to the support of circular economy-related initiatives; public equity funds, debt instruments, and circular economy-related initiatives funded through specific resources made available by the European Investment Bank to offer funding to such initiatives. Private equity, venture capital, or private debt funds are funds characterized by a fixed and not refundable capital endowment. These funds collect the capital raised by private investors, such as retail, professionals, or institutional investors, and direct it to specific categories of activities by following a specific and fixed investment strategy. Public equity funds raise money through an initial public offering, the IPO, to be invested in securities by following a specific investment strategy set by the company that manages the fund. Among public equity funds, the most common type are the mutual investment funds, which have the objective of collecting and investing capital to create value for the investor through the management of a series of assets and to spread the risk for investors by investing in different types of assets belonging to different target companies. These instruments come in different typologies depending on their orientation, such as equity funds, which mainly invest in shares and convertible bonds with higher returns and risk than other categories of funds, although the risk is more balanced compared to a traditional stock market, thanks to a differentiation strategy by company, geographical area, or the presence of government bond within the investment portfolio. Bond funds, which mainly invest in ordinary bonds and government bonds, which are less risky but also less profitable than stock. Balanced funds, which invest in different types of assets, intending to balance the performance and risk profile of equity and bond funds. Among public equity funds, there are sectoral funds and thematic funds. The former allow to invest in a specific market, while the latter analyze the structural dynamics characterize all sectors to select the companies that are most exposed to certain trends and are expected to show positive performance in the medium-long term. Looking at the size of worldwide and European thematic funds in terms of asset under management, funds dedicated to energy transition and natural resource management ranked second and fourth position in 2021. The former included funds dedicated to energy transition investment, such as in companies whose activities are related to the production of energy from renewable energy sources, the construction of renewable energy plants, hydrogen and decarbonization, and so on. The latter invests in companies that operate in the management of resources such as water, metals, rare earth, or waste. All these activities are directly related to the circular economy. Debt instruments are instruments through which a company can raise money. They are characterized by a legal obligation for the borrower to reimburse the lender with a borrowed sum plus an interest, according to predefined contractual terms. Among the main instruments issued by banks or other financial institutions, there are mortgage, which are debt instruments used for the purchase of assets, which are used as collateral for the mortgage itself, thus reducing the risk of insolvency of the borrower. Loans, through which financial institutions lend money to borrowers. Unlike mortgage, the sum received can be used for a variety of purposes, such as purchasing goods or financing a business activity. The European Investment Bank is the world's largest multilateral lender, strongly committed to sustainability-related financing. Overall, the European Investment Bank focuses its financing activities in the area of climate and the environment, innovation and skills development, small and medium-sized enterprises, infrastructure, and cohesion. Between 2016 and 2020, the European Investment Bank made 2.7 billion euros available for the co-financing of projects in various sectors that are consistent with circular economy principles. Furthermore, the European Investment Banking has launched, together with the major banks and financial institutions in the European Union, a joint initiative dedicated to the circular economy, with the aim of investing at least 10 billion euros by 2023. In general, the European Investment Banking support for the circular economy is directed toward different sectors, such as service industries, water management, agriculture and bioeconomy, waste management, mobility, urban development, and energy. To recap, we went through different financial tools that can be exploited to support circular economy related initiatives.